Man, you really can't ignore it.
Ain't no way.
This whole AI thing, like everywhere you turn, it's AI this, AI that. So much potential, so much buzz.
Yeah, no, for sure. I mean, it's definitely the hot topic right now.
And here's the thing, you look at the market, like the overall market, and it's kind of shaky, right?
Yeah, a little bit, yeah. Like a bit of a wobble.
Exactly. And that's what we're going to dive into today, really get into the nitty-gritty of AI stocks. How are they doing? Where are they going?
Yeah, and like, what's interesting is that there's this almost like a counter-narrative emerging.
Oh, really?
Yeah, like amidst all this market uncertainty, some folks are actually seeing AI stocks as a potential safe haven. Like a silver lining is how the Motley Fool put it in their recent analysis.
The Motley Fool, huh? So that's what we're basing this deep dive on.
Yeah, exactly. I mean, they've got some really insightful stuff in there.
Awesome. So our mission today, to figure out why, even with the NASDAQ kind of, taking a hit recently.
Which, by the way, is not insignificant. Over 10% down from its December peak.
Right. And the Motley Fool, they're kind of pointing the finger at President Trump, right? His proposed tariffs.
Yeah, they're saying that it's like spooking investors a bit.
Yeah.
Concerns about inflation and how it might hit corporate earnings.
Totally. So that's the background, right? Like this bigger picture of economic anxiety.
Right. So the question becomes, why are AI stocks, at least according to some, looking like they might actually weather this storm?
Okay, so to kick things off, let's maybe zoom in on some of the big players in the AI space, right, and see how they've actually been performing lately. Because, you glance at the headlines and
it's not exactly rosy picture, right?
Yeah, Nvidia, these guys are like the kings of AI chips. Their stock has taken a pretty significant hit in the past month, like what was it, 15%?
Something like that, yeah. And it's not just them. Palantir Technologies, they're deeply into that AI-powered software and data analytics world. They've taken a similar hit, I think even a bit more, like 17%.
Oof, yeah. And even SoundHound AI. They're all about that voice-based AI tech. Haven't been spared either. Dropped around 12%, I think.
Yeah, so if you're, looking at your portfolio, you might be thinking, wait a minute, is the AI hype starting to fizzle out?
Totally. So how do we reconcile these drops with this whole silver lining thing?
Well, it's all about perspective,
yeah.
Right? Like, we got to zoom out, look at the bigger picture. And that's where the Motley Fool's analysis really helps. They bring up a really important long-term forecast.
Okay, yeah, let's get into that. What's the long-term outlook for the AI market?
Well, the analysts are predicting some pretty serious growth. Like, they're talking about a compound annual growth rate, the average yearly growth over a period, assuming it's reinvested.
Right.
Of about 35% for the AI market, all the way through 2030.
Wow. 2030, that's what, 7 years?
Yeah, and that kind of sustained growth, it's going to propel the total market value, like the overall size of the AI market, to over $1 trillion.
Over $1 trillion by 2030.
That's a projection, yeah. So even though we're seeing these stock price dips right now, the underlying belief is that the AI sector itself is still on a pretty dramatic upward trajectory.
Wow. Okay, so the argument is that these dips, they're more like blips, temporary reactions to this overall market skittishness.
Yeah, exactly. And they're saying it's not a reflection of some fundamental weakness in the long-term potential of AI. And, there's some pretty compelling evidence to back this up.
Okay, like what?
Well, just look at the spending, like the massive spending plans coming from some of the biggest tech companies. Meta, for example, their capital expenditures. That's money they're spending on things like infrastructure.
Right.
Could reach as high as $65 billion this year.
Yeah.
And a big chunk of that is going straight into building the infrastructure to support their AI initiatives. They're even building a data center. And get this.
Yeah.
It's reportedly the size of, like, a big chunk of Manhattan.
Seriously, the size of part of Manhattan. That's insane.
Yeah, it really gives you a sense of the scale of investment we're talking about. And it's not just Meta. Alphabet, Google's parent company, they're also going big. $75 billion in capital expenditures this year. Again, a lot of that's for the servers, the data centers, the networking.
Right, the backbone of AI, basically.
Yeah, exactly. So it's not like they're just dipping their toes in the water. These are, tens of billions of dollars being poured into the very foundations of AI.
So they're putting their money where their mouth is, basically.
100%. And it shows, a deep belief that AI is not just some passing fad. This is core to their long-term strategy. And what's also really interesting is that there's, like, government support, too. The Trump administration, they've actually publicly applauded OpenAI's what was it called?
Stargate. Right?
Stargate, yeah, that huge infrastructure project. And they've even pledged to help them with, like the crazy amount of electricity these advanced AI systems need.
Right, because those things guzzle power.
Well, for sure. But anyway, so yeah, Stargate. That's a big deal. What are they like putting $500 billion into it?
$500 billion, serious.
Yeah, I think it's something like that. Over the next 4 years, all to build that cutting-edge AI infrastructure right here in the U.S.
Wow. So you've got these individual tech giants, you've got these big collaborative projects.
All betting big on AI.
It's not just talk, it's action.
Exactly. And to add to all of that, we've got some really interesting insights coming from like the actual leaders in the field. Guys like Jensen Huang, the CEO of Nvidia.
Yeah.
He's basically like the guru of AI hardware.
Oh, yeah, I've heard of him.
Yeah.
So what's his take on all this?
Well, he's predicting a global build-out of data center infrastructure, specifically for AI.
Right.
And he thinks it's going to cost, wait for it,
I'm waiting.
about $1 trillion. $1 trillion globally to power all this AI stuff. And that's not all. He also mentioned recently that demand for Nvidia's latest chip architecture, the Blackwell, which is like a huge leap forward in AI computing power.
Right, right.
The demand actually exceeded the supply at launch.
Wow. So they couldn't even make them fast enough.
Nope. Not even close. And that tells you something, right? Like, if the demand for the hardware is outstripping production, that means people are implementing and using AI like crazy.
Makes sense, yeah. So we've got these analyst projections, massive spending, government support, and industry leaders who are all in on AI.
And that's why, despite the current market jitters, the long-term outlook for AI is still looking really, really strong.
Okay, so that's the big picture. But let's get down to brass tacks. What does all of this mean for, the average listener who might be thinking about investing right now?
Well, that's where this whole silver lining thing comes into play. You see, what the Motley Fool is saying is that this current market downturn, even though it's affecting these high-growth AI stocks,
right,
it might actually be a really good time to buy.
Oh, interesting. Why is that?
Well, because some of these stocks, they've dropped to levels that are pretty darn attractive compared to their long-term potential.
Okay, give me an example.
Let's look at Nvidia again. Right now, their price-to-forward earnings ratio, that's a way to, measure how much investors are willing to pay for each dollar of expected earnings.
Right, right.
It's sitting at about 26. Now, here's the thing. For most of the past year, Nvidia stock has been trading at, 40 to 50 times earnings.
So it's way cheaper now.
Yeah, relatively speaking. So if you believe in the long-term story of AI and you think Nvidia is a good bet.
Which, they're a major player, right?
Exactly. Well, this could be a really good time to jump in.
Makes sense. But I'm sure some people are thinking, yeah, but what if it drops even more? Am I just going to buy in and then watch it tank?
I get that, for sure.
Yeah.
But trying to perfectly time the market is mission impossible. Trying to buy at the absolute bottom, it's basically a fool's errand.
Right.
What the Motley Fool is suggesting is, find a good company, wait until the valuation seems reasonable, and then go for it, even if there are more dips in the short term, if you've got a long-term outlook.
It shouldn't matter too much.
Exactly. So the takeaway here is, don't try to be a fortune teller. Focus on finding those solid AI companies that are trading at a good price.
Got it. So to wrap things up, what's the big takeaway from this whole deep dive into AI stocks?
Despite the market wobbles, AI is still a fantastic long-term growth opportunity. Companies are investing billions, the government is on board, and industry leaders are super bullish.
And for investors.
This recent dip might actually be a chance to snag some bargains. Companies like Nvidia, they're trading at much lower prices compared to where they were just a few months ago.
Interesting. Now, here's something for everyone to think about. We've spent all this time talking about the companies that are directly involved in AI. But what about the ripple effects?
Oh, yeah? That's a good one.
What other sectors or industries are going to be impacted by this massive growth in AI? Think about it. It's going to be huge. Positive impacts, negative impacts.
Yeah, you're right. It's not just about the AI companies themselves. The whole landscape is going to change.
Exactly. So for all you listeners out there, that's your homework. What are the second-order effects of this AI revolution? What's going to change, and how can you prepare for it?
Yeah, good food for thought.
Awesome. Well, thanks for joining us for this deep dive into the world of AI stocks. Until next time.